Good afternoon, everybody.
Yeah.
Welcome to After Market Monday. Mike, great to have you on board for this real quick session, and so nice to hear you.
Well, thanks. Glad I could make it. I'll try to make it when I can.
Okay, awesome. And so, still warm, and of course, it's still warm in Dallas. It's always hot in Texas in the summertime, right?
Yeah, it's only July. Ask me again like in October.
Okay. So I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. This is the After Market Mondays. Here's our objectives for this. Timely, actionable intel at the beginning of each week that you can work off of. Will it always lead to a trade? No, not necessarily, but at the same time, it gives you an idea of what I'm looking at. Now, if you're a premium active trend trading member, you should have received multiple texts today, because we did in fact get into two different positions based on rule number 2 and strategy number 1. And so we'll cover those positions here shortly. Again, the active trend trading premium members get all information via text message and email alerts way before any other people get them. So we'll do a real quick market review, stocks and ETFs setting up. What else, if there is anything else? And remember, have patience, stand back and respect the rhythm. I think that's one of the things, Mike, that you and I have worked on for years, is developing that patience and learning how to respect the rhythm of the market. Sometimes we do it well and sometimes we don't, but
yeah, and sometimes we go to the other extreme and we become too patient.
Yeah, exactly. And so, hey, David, if you have not, just shoot me an email on that, and we'll go back and double check as to why. Sometimes if you have done any changes to your mobile service at all, we have to reactivate it. So, did you get the email alerts though? Okay, cool. So here we go. So here's what I'm looking at. Remember, here's the things that are setting up for this week. 1, the Fed meeting this week, reports out on Wednesday. Mike, do you know what the odds are that they're going to raise rates again?
I think the odds are practically nil that they will raise rates again at this meeting.
So in other words, they're not going to raise rates?
Not right now.
Okay, so if they don't raise rates, might that provide a motivation or a catalyst for the market to move higher from here as a catalyst? We shall see.
Yeah, don't know. Market doesn't seem to need much of a catalyst anymore.
I know. I want to take a real quick look today at Nugget, TNA. Nugget could benefit from, the odds are 3%. Mark says he heard that the odds are 3% that they will raise rates. And so if they did raise rates, that would be a catalyst for the market to potentially go the other way. So GRUB, CTRL, FEYE, take a real quick look at Tesla, NVDA, and I also want to take a really quick look at IBB and LABU. I'm going to start there, and the reason why I want to take a look at those two is because of the difference between LABU, 3-time leveraged ETFs, IBB, this is the biotech, just non-leveraged ETF, and there's some subtleties going on with the difference in the charts that is kind of interesting, that you need to be aware of, especially if you are trading the leveraged ETFs. Okay, IBB. Let's take a real quick look at IBB. As you can see, IBB has popped up and clearly and has cleared. Make sure that's a daily chart. It is. I want to expand this a little bit, I think. No, I don't. Sorry. I'm trying to stay on course. But as you see, it hit a high and it's broken above the swing high from the 22nd of June, and it's pushing on to make new highs. Now, this is, again, the non-leveraged or one-time leverage ETF for the biotechs. Look at the 3-time leverage. And this is partly what happens with LABU, I do believe. There we go. And as you can see, I want you to take a look back here at this level here, and it's just barely making it above. If it pressed higher above this level here, but this swing high here was significant. Was at the beginning of the day was way above where the price actions were, and so that's the kind of thing that can happen. I'll go back to IBB, and you see IBB. Spent all day above the line already. So what that means is the derivatives that are being utilized to mimic 3 times the move of the biotechs is the value of those slips a little bit with LABU due to contango and or backwardation, some people call it, and so that's what's going on there. And I thought that this was a really good example because the technicals on this, looking at all the oscillators and all that type of thing, not a lot of difference in that. And this is another reasons why, like in the case of like Mike likes to trade either the index itself and or at least the non-leveraged ETFs to take your signals off of. Correct, Mike?
Yeah, correct. Can you? Okay, all right, good. Thanks. I was going to ask you to do that. Take a look at the weekly chart here of IBB, which is the non-leveraged ETF.
Right.
Right.
Yes.
And if we look at our, on the weekly chart here, we look at our market forecast, and we can see, just take a look at these very oversold conditions, like in June, June of last year, kind of oversold on 2 of the lines back here, like in August or September of last year, and.
You talking here?
And last year, 2016. Yeah, down around there.
Okay.
And then go back. We had this little cluster back in February or March. Remember, in February of 2016, everything was selling off real hard. So try to take a mental image of that. Now let's go to the LABU chart.
Hold on. I'm going to line that up there just to line up that. So now what's really cool about this is because I have, in fact, LABU. Those will stay. Oh, well, it didn't. It slid forward because I think LABU was not in effect during that time frame. So anyway,
okay, but you do, yeah, but you do have your marks. So notice that there are differences in the indicator on the chart of LABU, which is the leveraged, ETF, and IBB, which is the non-leveraged ETF.
Right.
And this is why I like to take my signals off of the index chart, and then if you have a signal on the index chart that makes you want to take action, you can then go ahead and choose the vehicle that you want to choose to trade the signal. There can be, the point being, there can be differences between what the non-leveraged and the leveraged ETF charts are showing you. And that's why I go back to the source being the index or the non-leveraged entity, make my decisions accordingly, and then choose whatever trading vehicle I find appropriate.
Exactly, and there you have those items all lined up. I may have shrunk that in, Mike, because I think. Hold on just a second.
Yeah,
I think I did a little bit because I think that should have been. I think that should have been probably around here. There was one. Yeah, we were covering. Here we go. Here we go. This will bring us more into line here.
Yeah, it's hard to see it, side by side, the way you have to display things on the webcast.
Yeah.
It might be easier for people to see it at home if they have, you know, Thinkorswim allows you to put two charts right next to each other and have you know, the charts be for different, you know, entities or equities or ETFs. And then you can compare them a little more carefully and a little more closely and just try to see the kind of thing that we're talking about and why I, you know, choose to look at things the way that I do.
And so, yeah, there we go. That's a little bit better lined up, I think. Now, when I switched, that was the problem. When I switched over to LABU didn't line it well. These two lined up, and now so you got a little bit of a lineup here too. I mean,
okay.
So that part is pretty good, but at the same time, the actual what was showing up here on the chart itself compared to IBB, there we go. Same time frame. Look at IBB. You're getting a kind of surely, showing a stronger level of, or a level of support that is horizontal, where the other one was going up a little bit or down a little bit. And that's what happens, like I said, because of the derivatives that are utilized with the leveraged ETFs. The charts on the leveraged ETFs are not as pure as the signals you're going to get from either the indexes or the non-leveraged ETFs. So that's the lesson to be learned there. Cool beans, man. So let's run through really quick. Of the indexes, we actually get a really nice bouncer there. Let's go back and before we get to that, let's look at the SPX. Get rid of our, there we go, SPX. SPX basically, remember, it is, with SPX, it is, FOMC meeting this week. So not expecting the S&P to do a lot moving into that meeting, which they report out on Wednesday. On Wednesday at 2 o'clock in the afternoon Eastern time, about 11 o'clock in the morning Pacific time. And so just anticipate from a purely technical standpoint, it looks like SPX is wanting, the S&P is trying to top. We're getting a rollover on the TSI, which oftentimes tells us, hey, we have peaked, we are not going any further up for a while, or we may get a slight pullback. Where does the S&P become interesting? Well, a pullback into the moving averages, either the 8, the 20, or in between the 24-53 area. We're still getting a little bit of negative divergence. I want you to keep an eye on, if you are using the Thinkorswim platform, keep an eye on this three-line cluster up in the upper reversal zone, which can oftentimes be a precursor for the index rolling over at this point. So let's take a real quick look at NDX. Now, Bob asked a question, what do I mean by pure when I'm talking about the index or the ETFs? I'm talking about the purity of its technical signals. Bob, because the leveraged ETFs are based on derivatives, sometimes those derivatives get out, it doesn't give you the same exact technical chart picture that the non-leveraged or the index does itself. And so just want to let you know that. So that's what I mean by purity of the signal. So derivatives introduce another set of variables into the act. Okay, NASDAQ pushing on a new highs. Again today, it's outside the Keltner channel. And again, so I'm going to put this in the same category as the S&P, just waiting for the Fed. Not going to take action on this. And if you see anything, Mike, just The one that really interests me is the Russell. The Russell came down, hit off the 8 today, and then appeared like it wanted to bounce back up. It still has a spinning top doji, a bearish engulfing from Friday, and we're bouncing off the 8. Will that continue to push itself back up, or are we going to get this negative divergence as shown on the weekly chart for a nice little pullback? I would like to see, from a trading perspective, a pullback down here into, at least the moving average is about the 1420 level, to plan a trade off of that. I'm going to throw a real quick fib retracement on it from this last move. And so there you go. So a 61.8 or a 50% retracement would take us down between the 1419 to 1425 level. That would be, and that may be all the pullback you're going to get on this. If the Fed does not increase rates, that could be a positive sign for the Russell to say, okay, hey, let's run a little bit higher. So, any comments there, Mike?
Not that I can determine.
Okay. Okay, let's run quickly through the okay, CTRL. Okay, we had a pullback into the 8-day moving average, and today, and so that's a rule number 2, as far as a bounce off of the moving average. We have earnings coming up on 8/3 after market closes. We actually got into this trade. We got into this trade at. Okay, we got into this trade at CTRL at 23.32, and then we got into the FEYE trade at 15.89. And so the anticipation, the expectations on CTRL is to get at least a 5% bump prior to earnings. I will make sure I close this position prior to earnings. My objective, 5 to 10% in the days leading up to earnings. Okay, FEYE. FEYE is kind of interesting. One, it came down here. It's in the middle of of its Keltner channel, but it's bouncing off the 8-day moving average today. Not on great volume, but it too, if it's going to make an earnings run, it should start making earning runs pretty soon. 8/1 is when it has earnings. Make sure I got that right. And in my note that I sent out on this, I don't know if I've sent it out yet or not. I may have put 8/2, but please make a correction on that. The anticipation again, if we get up about 1660, that will be a 5% gain. And I have no problem in closing it out with between a 5 to 10% gain on a real quick swing trade on this. Another one that is also looking positive is GRUB. GRUB. Okay, same thing. Earnings, 8/3, unspecified time, but it looks like the earning calls is at 3:30 in the afternoon, which is just about after the market closes, and looking for this to potentially pop up. I'm deferring to the hourly chart on this one. I like it down here at about the 45 level. But it's just kind of hanging. I don't really have a great signal with a TSI tick up, and on the daily charts it looks like it wants to kind of roll over. But if it's going to do a pre-earnings run, it's in that level where would make it possible. It's got a little bit of a cup handle, well, it's not a cup and handle on a daily chart, but a little bit of it's moving in this lateral price action. I'm waiting for it to possibly break up. Where would I expect it to go? Well, if it ran up to 40, just below 48, think of it about 47.72. That would give us about a 5% gain. And so that's that one. Real quick, let's take a look at Tesla. Tesla made a move today, as you can see, pre-earnings move, and was just kind of one of those you just want to just say bad words, but I didn't. But because of the nice move, it moved up. It didn't come off of a, in the lower level TSI or anything like that. It just pushed higher. It has earnings coming up on 8/2. So now I'm modifying my game plan on this. So if we get a pullback on Tesla back in the 336 to 335 level, that's where I would look at buying either the 340 or the 345 calls on this. That would expire next week, and then I would sell those calls prior to. I wouldn't buy a lot. I would buy 1, 2, or 3 calls because what we're expecting is the implied volatility to expand dramatically, and if it moves up and expands dramatically, that can give us a really good return. Again, didn't get a really great entry on this. Okay, the other one that is coming up, NVDA. NVDA, there we go. Again, just kind of hanging out just above the 8-day moving average. Looks like it wants to roll over, but it has some moving. It has earnings coming up on 8/10, and so if we get somewhere a pullback into the 50 period on the hourly chart, or even down here at the 160 level, that may give us an opportunity to go ahead and jump in this trade prior to earnings. But I'm keeping an eye on this. Would like to get into it somewhere between the 7 to 10 days, calendar days before earnings, and so we're approaching that very quickly. So, okay, Mike, that's all I have. Well, I had one last one just to throw out there. And again, this is one of those where we get a really nice breakout. Oh, I know what I wanted to show on this particular one, because it shows something very clear, is that pay attention to these. If an entity is showing that it's flagging, pay attention to those flags, because what that can do for you is when you can draw a flag in here, such as this flag, boom, this flag here, that each one of those entries, oftentimes you can put an entry point or a conditional order just above that, and if price action moves above it, oftentimes that will also trigger a tick up on the TSI, which is an entry rule. And so just be aware of that as you're moving forward. So, hey, Mike, sorry, we went a little bit more than 10 minutes or 15 minutes today. Mike, you got anything else, bud?
No, I know we're trying to keep it quick, and I'm glad I was able to be here today.
Okay, awesome. Okay, everybody, thank you very much. Just watch out for the alerts, and like I said, David, I will send me an email on that, and we'll double check what's going on with the text messages. So, okay, everybody, have a great afternoon. God bless, and we'll talk to you on Wednesday for the premium guys and Friday for how to make money trading stocks. Aloha.